South Africa's most valuable bank didn't just hit a billion-dollar regulatory wall in the UK, it just triggered a massive red flag for global capital flows. When FirstRand abruptly packed up its British operations this week, it exposed contagion of risk for emerging market capital. If the West's hyper-regulated environment can vaporize a decade of profits overnight, the entire African expansion playbook is about to be violently rewritten. This is not a standard market exit. It is a strategic amputation. FirstRand is aggressively offloading its UK operations, including Aldermore Bank and its vehicle finance arm, MotoNovo. The fatal blow? A draconian, retroactive ruling by the UK's Financial Conduct Authority regarding undisclosed car loan commissions. This stringent redress scheme forced FirstRand to provision a staggering $957 million. To put that catastrophic figure into perspective for investors, that single regulatory penalty wipes out nearly 3 times the total profit MotoNovo generated over an entire decade of operating in Britain. For FirstRand's C-suite, the math is brutally simple. The UK market now presents an asymmetric risk profile where unpredictable regulatory lookbacks completely destroy the fundamental risk-to-return ratio. Rather than bleeding capital into a hostile compliance environment, FirstRand is executing an orderly ownership transition and cutting its Western losses. This retreat shatters a decades-old corporate mandate. For years, African multinationals, CEOs, and institutional investors viewed European expansion as the ultimate benchmark of global scale. Today, that thesis is flipping. African executives are realizing that mature Western markets carry lethal, retroactive compliance traps that offer rapidly diminishing returns. This marks the beginning of a major capital reallocation. Instead of deploying billions into aggressively regulated overseas territories, we are going to see African capital pivot inward. VCs and institutional investors will increasingly reroute dry powder toward high-growth, high-yield regional plays across the continent where the regulatory environment doesn't threaten to obliterate shareholder value overnight. To summarize, FirstRand is executing a ruthless exit from the UK, absorbing a near billion-dollar hit to escape an unpredictable regulatory regime rather than endure limitless compliance costs. This historic retreat signals a major shift in how emerging market capital evaluates Western risk. Do you think this will trigger a broader contagion, causing more African banks to retreat from European markets? Drop your macro predictions in the comments below. And to ensure you never miss a critical breakdown of the capital shifts shaping global markets, hit that like button and subscribe to the channel.